Yo people, what's good? Today I'm going to be discussing how I trade the 3 to 4 p.m. silver bullet session, if that even makes sense as a statement. However, that's what I'm going with and that's what we're going to fly with. The title is going to make more sense than that, but I'm not going to start this video again. I'm going to just keep it real and tell you I planned to enter this trade. However, I had to leave to go to the shops essentially, and by the time I had come back, price had already moved too far. I placed the fair value gap, I placed everything, the session low, the session high, or for example the liquidity sweep. I just didn't manage to, because I had to essentially leave, and on the phone there's no DX trade on the mobile, or if there is, I haven't figured out how to log in. I only have DX trade on my desktop, so I couldn't place the limit order. Didn't have time, left, came back, and it had executed perfectly. So I'm still going to discuss it and make a video out of it. Just I'm going to give you that insight so you know this trade wasn't placed on my account. People in the comments or on TikTok or whatever always say, yeah, people talk about it in hindsight. And yes, I am talking about it in hindsight. However, this is exactly what I did want to happen, and it did actually occur. So I'm going to take it as a win for my psychology, not as a win for the actual account. And I'm going to talk about it and discuss it, because the opportunity is there. So 3 to 4 p.m. ICT fair value gap trading. Essentially, the 3 to 4 p.m. session is a kill zone that you can look for a 5-minute fair value gap to form if you have bias for the day, if you see other confluences, and if the first 5-minute fair value gap is an entry point. It's not the be all and end all. However, the 5-minute fair value gap is where you look to get in and out of the market. Now, in order for, one second, let me make this video a bit more understanding. So I've just written down essentially step by step to make it more understandable for you to execute on, and so you can backtest it. Number one, it is called the AM session silver bullet, and it's between the hours of 3 to 4 p.m. GMT. Now, New York time, this will be very different. This might be, what is that? I'm not going to do the conversion. New York time is different. It's based off of New York trading times. It is between 3 and 4, and we're looking for a 5-minute fair value gap. However, we are not looking to enter simply off of just the fair value gap, as you can see. We need to understand exactly where we're getting out of the trade first before we get into the trade, because the trade needs to be able to offer at least 15 pips. We need to be able to get at least 15 pips from this move. You do not need to catch all 15 pips. What I mean by this is it needs to be able to offer that if you wanted to get that. If that is the minimum threshold that it can give you. So if it can give you 30 pips, you can ride it out for 30 pips. But if the whole move, if there's not a buy side liquidity area or an area that you can get out of the trade within that first, or within 15 pips, if it's 7 pips, you can't enter because it's not giving you enough. The first point of exit needs to be at least 15 pips away. You don't need to catch all 15 pips. You could take 7.5 pips if that is a 1 to 2 and you're happy with that. However, you need to understand that if there's not an area of buy side liquidity that offers at least 15 pips, the trade is less likely to be valid because we're less likely to get drawn to that area of buy side liquidity. The trade can run past 4 p.m. The trade has to simply be entered within the 3 to 4 p.m. window time frame. Does that make sense? So let's go to the charts now. And as you can see, this is literally my when I learned this stuff, this is literally my stuff when I learned it from ICT videos, I learned from other people's videos, and I wrote it down, and this is how I broke it down. I think I copied a few things, but I worded it in different ways for my understanding, and that's what I've just shown you. So now, as you can see, we have a liquidity sweep of London session lows here during New York session. New York session open, we dumped down, we swept out London session lows, which is another confluence which helps me believe price is going to go bullish. On top of that, you need higher time frame analysis. Some people say you don't, some people say you do. I like to have a daily bias when I'm trading, regardless of what strategy I'm trading. As you can see, daily, I class this as a bullish market because we broke structure here to the upside, simple as. Now we drop down to the 5-minute. As you can see, we had a sweep of liquidity. So I'm cutting the video here to put this in just to make a bit more sense of what I was just talking about. As you can see, I was just talking about how we had just had a liquidity sweep. A structural inducement is not necessary for the 3 to 4 p.m. silver bullet model to work. However, obviously, as you understand, the more confluence you have and the more reasons you have to enter a trade, the better. So however, I'm talking about the liquidity sweep that we had prior to this 3 to 4 p.m. fair value gap. That is just another what's the word I'm looking for? Another confluence I have learned over the years, which makes me more confident to get into the trade. However, this is not required. I just wanted to say that. And then within the 3 to 4 p.m. time frame, we printed a fair value gap, and it's the first 5-minute fair value gap. However, okay, let me word that better. If you're trading with no bias, it's the first 5-minute fair value gap. If you're trading with bias, it is the first 5-minute fair value gap that forms within your bias. Because as you can see here, the first fair value gap is actually a bearish fair value gap here. Now, what you could do is, if you were bullish and you see this bearish fair value gap and you still wanted to buy and you're waiting for a bullish fair value gap, to increase and change the strategy a bit, you could wait for the inverse of the bearish fair value gap. However, sticking true to the core of how this strategy is traded and how I trade it, I wait for the first fair value gap that forms in my direction, in the direction of my bias. I'm back again. Once again, I wanted to just add a bit of information based off what I've just said. In terms of entering on a inverse of a fair value gap, for example, as I was just showing, you can enter on the inverse of a fair value gap. However, as you can see, if you enter on the inverse, you are going to be getting less of a RR. You're going to get less of a sniper entry, so to speak. Your stop loss is going to be larger because the candle has inversed the fair value gap. However, that means you are not getting in on the fair value gap. So just be wary of this. Understand that if you do enter on the inverse of a fair value gap, which you can do, and I'm not saying you can't, but you will have to understand that you will be getting less RR, less risk to reward. Your stop loss will be larger. Obviously, just bear that in mind when entering the positions, when putting your lot size. That's all I will have to say about that. So which would be this fair value gap, 15-minute fair value gap here. You place your limit. I place my limit order on the 50% mark of that fair value gap. Some people do the top. I've just found more success with the middle, and I like to see price get tested lower down before getting the entry. It gives you more higher RR trades, as this is 6.42, this would be 5.2, so one more R just from that small difference. You will get tapped in, and you will get tapped into trades less like this. However, this is just how I do it, so do it as you wish. And as you can see, I have placed my TP all the way at London session highs. This is London session open, 8 a.m. This is London session highs. I place my trade, my take profit here, because it lines up with how I trade and the confluences that I like from my AM session or my London session trading. However, you can place it wherever you want. As I said, it has to offer a minimum of 15. You could take less if you wanted a 1 to 2. However, the first buy side liquidity area needs to be at least 15 pips away. And as you can see, my area of buy side liquidity was 36. The first proper 5-minute buy side liquidity point would be here, which is 33 pips. And that is how I trade the AM session silver bullet method strategy, 3 to 4 p.m. GMT. Manners and respect.